The Morgan Report with David Morgan.
David Morgan of themorganreport.com. It is the 12th of February, Friday, 2021. Well, this one may be briefer than some of mine. I try to keep them around 10, 15 minutes at the most. We're looking at intraday. This is a delayed quote from the Kitco website, as you can see. And silver's up 25 cents. Gold's off $5. Platinum has been doing well, and we have been bullish on platinum for some time. The story on platinum is pretty basic. The catalytic converter market, both diesel and gas, a lot of it's going to be converting to platinum in the system rather than palladium. So basically thinking that's probably something to think about. It's been on the move, it's been strong, and I think that will continue. You can get that information from the Platinum Guild, which is where I went and verified everything. All right, we're taking a look here at the HUI, the Gold Bugs Index. I'm not going to go through all of them because it's kind of a waste of time, and I want to make this rather short. And usually the stocks are an indication of what's going on in the metals. In other words, the mining equities, which is, as I said, the Gold Bugs Index. Well, they usually set the scene, meaning that if you get a up move in the stocks, it usually precedes an uptick in the metals and vice versa. So as you can see, I'm doing this today, and drawing freehand on this stuff isn't easy, so please, no negative comments. We are below the 200-day and the 50-day moving average, and it's kind of just flatlining around this area of, let's say, 290 basis, the HUI. And if you take a longer view from basically the whole year, from January onward, we're in, you could call it a channel formation, pretty flat, somewhere between the 320 level at the very top and the 280 level at the bottom. So we're in what I would call an indecision pattern, basically as many bulls as bears, slightly to the downside because we're under the 250-day moving average. Strength-wise, it's not good. And let me just say that I thought earlier, late last year, early in the year, that we would see the normal seasonality, which means that we're going to have a strong first quarter in the precious metals. That does not appear to be the case, at least basis the mining equities. This is a ratio between platinum and palladium. And as I said at the very beginning, we've been favoring platinum for a while. When this is going this direction, that means that palladium is doing better than platinum. And when you see it going this direction, that means that platinum is doing better than palladium. Obviously, the trend has changed. You've gone for this long. This is 3 years. You could go back a lot further. You'd see basically the same trend. So this trending down, again, palladium doing better than platinum. And now we have just started the trend up. Where will it go and how high, I don't know yet. But the market knows more, as I say all the time. And I expect it has quite a ways to go. All right, probably what most of you are interested in. Let's take a look at the silver market. And this was very recent. As you can see, the gray is buying, the red is selling. Huge buying pressure. Haven't seen this kind of volume in quite some time in the silver market. We're looking at 6 months. You go back 6 years, you'll probably not see that kind of volume in a day. Gapped up. There's a gap here. Overseas, we got over $30 an ounce, as you can see from this chart. And then you had selling the next day, which was significant, more than normal, but not as much as the buying pressure. Took it down. And we're now been in a range, as you can see, somewhere, let's call it between 625 and we'll call it 2775. I'm just talked about those 2 days. So we're there, and we've been there before, as you can see over here. In fact, if you look over here on the left side, again, this is a 6-month chart, and you look at the going into September time frame, we were somewhere between 26, 25, just drawing, this is art, not science, up to about the same level. And we stayed there for, what is that? I'm going to guess a couple months or so. So we may continue that, but to me, that's hard to imagine with all the buying pressure that's going on through the entire market from retail to wholesale, with wholesale actually bidding up the price of 1,000-ounce commercial bars, which is pretty much unheard of. There's lots of verification on that. I'm not going to waste my time. You can look at others' videos, which I'll be mentioning here at the end of mine. So 27 is kind of the level that I've chosen as a breakout for the recent months here. And the left tick is the open and the right tick is the close. So you can see back, I think on the 8th, if I'm reading this right, you close over 27.50. The next day, it looks like 27.30-ish. The next day, right around 27. The next day, right around 27. And I want above average volume, and you're seeing the volume is actually going down. So I'm not technically looking at this to be strong, and that's only looking at the chart. I'm not talking fundamentals at all. Fundamentally, I don't think I've seen anything close to this in my years, other than during the Hunt Brother days when there was a lot of talk about silver, and now with the Wall Street silver crowd understanding the fundamental view of fiat currencies and how silver plays a role in the overall scheme of things. And one of the arguments for hard assets certainly comes into play, and the education and awareness factor cannot be qualitated on a chart just by volume alone or whatever, especially what happens on the retail side, which is in a very interesting situation, especially the mints having reallocations that are not, let's say, what we'd like to see basis the amount of demand. CPM Group out of New York, Jeff Christian, did an update today prior to me making this one a few hours before mine, and I'm not sure when this will be posted. But he pointed out some interesting things that some of you, at least new people, are probably not aware of, about how many banks have really just closed their association with the metals markets. This is from Reuters, as you can see, and the date was April 28th, 2020, as you also can see. And Scotiabank, to close its metals business, talks about them closing down. It says, once global player with more than 100 staff offices in New York and London to India and Hong Kong, the bank sharply downsized business in 2018 after a strategic review and unsuccessful attempt to find a buyer. So they're trying to find someone to buy their metals desks, and there was no interest, or not enough, let me frame this correctly, to find someone that wanted to take it over. But it remains one of the 5 banks that settle gold trades and one of 12 market makers that provide liquidity. So what Jeff points out is there's fewer and fewer of these trading desks, metals desks, banks, whatever you want to call them, then there's less and less liquidity. And that's true. And I'll leave it up to the viewer to think about why someone in the industry would want to remove themselves from the industry. And for us metals heads, we know this. This happened quite some time ago. This is from Ronan Manley, Bullion Vault. Used to work at Goldcore. I know Goldcore well. I do know Bullion Vault as well. Don't know Ronan personally, although we may have crossed paths on the speaking circuit. Before I go any further, he wrote an article that has something about, it's Houston, we have a problem. 85% of the silver supply is in the ETFs basis, the LBMA. Something like that. You can find it with the search. It's really all over the place. I highly recommend this weekend that everybody take a look at that dissertation from Ronan. It was very, very well done. He does excellent research, and I can't say really enough positive, at least on that basis. And all that I've seen from him, I don't have time to read everybody. So back to this article. I digress. Rothschild emerges from the shadows of the century of low London gold fixing. What this article talks about is how long the Rothschilds have been fixing the gold price at the Bank of England, and they left. They left that, and they left that quite some time ago. You can see here the Rothschilds remain as gold fixing permanent chair until May 2004. That was quite some time ago. And gold fixing stepped back into the shadows after 200 years in the London gold market. So you've got the Rothschilds themselves that way back in 2004 said, we're out. And then Scotia Makata used to be like the hugest, most liquid and biggest market maker in options in the metals. And this was prior to any ETFs. And it was really, I think, before options on futures. I may be mistaken there, but there was a lot of over-the-counter options that Scotia Makata at the time made a market in. They're out, and Ross Shields are out, and there's others as well. And Jeff, you can listen to his update. It's from CPM Group. So those that are interested, that want to see what's going on, let's say from the newer perspective, people that are kind of getting into this market, maybe they've been in it for a while. If you take a search engine and you do an r/Wall Street Silver, and you enter that, you're going to get there. And then you can click that, and you will get this, which is the posts for the Wall Street Silver Group, which I think is growing. Right now, there's 23,700. They call themselves Silverbacks, which is a gorilla, as most of you know. And I kind of think it's a nice way to look at it. There's a lot of humor, a lot of young, a lot of energy, a lot here that I really, really like. They don't have everything factually correct, but most of it really is. And they're questioning everything, which I think is a great place to start in life and through your life. Is don't accept the authority's word on anything. Verify it, question it, re-verify it, whatever. So my take on it doesn't have to be yours. You see a lot of these pictures of people stacking their silver and showing you. And there's other subreddits to the subreddit. This is a subreddit group, Wall Street Silver. But within this, there's this due diligence, XAG YouTube channels. So you can go there, and there's Schiff, Arcadia Economics. I'm not sure. There's Mike Maloney's Gold and Silver. Shout out to Mike, Silver Bullion TV. I know them. Palisade Radio. I know them. Gold and Silver Pros. Yes, myself. Thank you. I don't know what's over here. Okay, there's SD Bullion, James Anderson. Silver Report Uncut. This guy probably doesn't get enough shout outs. He does very, very good work. It's not always about silver, but it's usually economically oriented. Fact finding is excellent and gives you kind of the big picture, like I like to do, about why you would want precious metals. Hidden Secrets of Money. That goes to Mike's site, which is something, if you haven't done it, everybody needs to do that. If they have money, use money, spend money, or save money. Because most people don't understand money versus currency. Mike is the number one in the world, in my view. Yes, we're friends, but business is business, and the business of money is important. And Mike breaks it down for you. And really could have put that money or that profit into his back pocket, and he did not. He reinvested it into your education. So certainly, thank you, Wall Street Silver, for posting the Hidden Secrets of Money with the direct tab. And I'm not sure what Silver post on WSB. That's Wall Street Bets, I'm assuming. And this is a little not over my head, but these are just threads. I'll get off of there because I'm not going to go into it. But that's about it for me. I'll just drone on a little bit longer. The match between the amount of silver demand and the price just doesn't make any sense to me personally. I mean, if you think about the fact that in a good year, I'll back it up with the Silver Institute, you usually see about 120 million ounces going into the ETFs in silver when it's, net buying by the ETFs. We saw 110 million. It's been the number batted around in a matter of about a week. I'm not sure of any commodity that would have a year's worth of buying pressure to the upside in wheat or corn or cocoa or soybeans or copper that wouldn't have a price increase commensurate with that kind of demand. Now, I did show you a chart earlier. We did get that gap up, and we did see the $30 touch, but it was whack-a-mole in my view right after that. Then that demand didn't go away. So interesting times in the silver market. I've been at this a long time, and it continues to get more interesting. Again, David Morgan of themorganreport.com. Remember, there's nothing more powerful than the truth. The truth is that all fiat fails. The truth is take self-responsibility and be responsible for your own actions. Question everything, question everyone. It's not always easy to see the truth initially, but it usually comes out. And by the way, the truth doesn't have a bias. It's just what it is. It's the truth. So that will end it for this week. I'll be back with you next week with another weekly perspective from David Morgan of themorganreport.com.